Disclaimer: no data subjects were harmed in the making of this podcast.
Welcome to the Privacy Bar and Bants podcast. We make privacy awareness simple. Sit back, relax, and grab your darkest privacy myths and misconceptions. Your mind-boggling experience begins in 5, 4, 3, 2, 1.
I love to drink water.
Well, anyway, so who am I? I'm yet in the industry.
Next question. Next.
Hey everyone, I'm Colin Rice from the Center for Financial Inclusion at Accion. I've just had a great conversation with Dolly from the Privacy Bars and Bants podcast, and we got into some really interesting conversations around the opportunities and risks that we've seen with the spread of digital financial services, and really how this looks in terms of data protection and consumer protection issues.
I think just deep diving into the main conversation on Payday and digital lending companies, or lendtechs as we know them. Sometimes I'm excited to hear about them. Sometimes it's more of a bummer, right? Because there's like the good sides and the bad sides. And sometimes you wonder, are the bad sides outweighing the good sides or the opportunities that come with having lendtech platforms, right? And I mean, as we know it, they've come to democratize access to loans. And that's really great because it widens the bracket of people who can have access to loans. And I mean, in places like Africa, before now, more often than not, people who could have access to loans, easy access to loans, were people who probably had to have high level, certain criteria that was probably long, or certain high level individuals, right? But with lendtechs, access to loans have become easier for a lot of people, right? But my question is, so sometimes it feels like we're sort of kind of making trade-offs, right? With easier access to loans comes probably some trade-offs. My first question with you, what trade-offs are we making? Probably in terms of our data, in terms of some of the issues we have now, we didn't have them with traditional lending platforms. So what sort of trade-offs are we making, or what's really going on in the space?
So I think I can touch on that a little bit. And absolutely agree that, I guess like most things in life, there are always kind of those trade-offs. You kind of have to take a little bit of the good with the bad. I think the sector in general has started focusing, I think for a while it was all about access. The like impact and success in the sector was very much being tracked by how many people are taking loans, how many people have new accounts, like it was really just how many people can use these services. And I do think as a lot of, those kind of negative, as the benefits kind of increased, but also as it came to be seen a lot of the risks, I do think now there has been a shift to looking at not just who's using this, but how are they using it? Are they getting responsible terms? Is it actually benefiting people? And I think in terms of the trade-offs, first, I think, I think there has been, very significant growth. And I think especially during COVID, just digital kind of systems really grew, partially out of requirements because, people couldn't really act in person and needed to go out. I think a lot of governments also kind of pushed people towards using some of these digital channels in order to access different relief funds and things like that.
Totally agree.
But, I think with fintech approach or lend tech, as you're kind of saying, I think some of the maybe I'll start with the opportunities and then move to the risks. I think one thing is really the ability to really meet new customers, kind of without some of these investments in kind of costly or limiting infrastructure, and really being able to reach kind of last mile consumers. Traditional lending, and even with a lot of these kind of like agent networks that we see, it requires a presence in or if you want to reach people that are far outside of the cities, then you need staff there, you need a building, you need kind of that infrastructure, so some sort of base of operations there. But I think with a lot of these lend tech apps, all they require is, once a telco is present in the area and there's at least decent connectivity, then all of a sudden a big rush of providers, and again, for better and for worse. But, I think that is one thing that it really kind of allows a much greater number of providers to reach a much wider area. And it also kind of lowers that barrier to entry. Whereas, previously, if you wanted to start a lending company, you'd have to pick a location, in addition to all of the collateral and funds for your loan book, you had to actually invest in kind of that physical infrastructure to exist. Whereas now, once you've raised the funds and kind of made your appeal to investors and things, it's a little easier to kind of, once you're accessible on Play Store or on, any of these kind of other systems, then all of a sudden you have access to kind of a very wide range of a consumer base. I think those sort of aspects in terms of, allowing a greater reach and more easily reaching, especially those that have most traditionally been excluded from credit and other financial instruments. So I think that reach and kind of that lower barrier to entry really driving competition, I think is generally or can often be a positive things in terms of giving people more choice, but also, lowering prices and things like that. I would say those are probably some of the key opportunities, but I think, again, like we're saying kind of on the flip side of that, I do think this greater prevalence of lending apps and really all, kind of just different financial services being offered through digital channels. There's this organization, CGAP, the consultative group to assist the poor, and they've kind of broken down risks in digital services to fraud, data misuse, lack of transparency, and then kind of inadequate redress mechanisms. So if something does go wrong, do people have the ability to raise that complaint, to get either remuneration or whatever it may be to address their issues? And I mean, I think like one kind of key fact or, kind of stat that really shows this kind of flip side we're talking about is, I think CGAP put together some stats looking at kind of the increase in data being created and in mobile transactions, and then compared it with kind of the increase in some of the in some fraudulent activities. And, in some cases, it's basically, you see fraud is growing more quickly than access or usage or some of, or some of these kind of services, which is clearly, I think one of their stats was a 257% increase in data being created, but an almost 480% increase in records that were exposed through hacks, through data breaches and things like that. So, I think those are just some of the examples, but I do think, like I was saying, with kind of a lower barrier to entry, with things like that, it allows positive and, responsible players into the market, but it also allows, people who are there to make a quick profit, fraudsters, scammers, all of those, it also allows them easier access into these kind of consumer bases.
I mean, I like the fact that you talked about the selling point, which is majorly accessibility, inclusivity, and especially with people in rural areas. And I think also the point where it sort of translates into more profit and less capital injection for some of these companies, because they don't have to, build like an office or a particular place because they want to reach certain people, right? All that they need available is like a telecoms provider, right? With that being like the great parts, I mean, there are also the cons, which you mentioned and which you touched on. I think I do agree. And I think I particularly like the fact where you talked about redress mechanism. Something we noticed on this side of the country is for a lot of these lendtechs and bad actors who are not so responsible, we see a lot of them just copycats. So for example, one lendtech takes the privacy notice of another lendtech and just copies it word for word, including their name sometimes. That's the level of, I don't know now, irresponsibility, right? They copied including the other company's redress mechanism or email address for redress, right? And what happens is that when the user wants to probably make a complaint, there's no one to reach, or they reach out to another company entirely who they have no business reaching out to. So there's a lot of funny stuff actually going on this side of the world. But I mean, there's been, in the last 2 years, there's been some sort of regulation on, on that bit. But coming to something that I think I really wanted to touch on, right? I don't know if you, and because of the kind of work you do, I don't know if you've ever done like a test run on some of these platforms, right? Whether good ones, bad ones. I wanted to just give us like a breakdown of what really happens back end, right? And maybe with that in mind, sort of tell us what happens, right? And what should happen from a data protection perspective.
And well, sorry, so what do you mean, like what exactly happens on the back end?
So for example, just a rundown of the process, what kinds of data they collect, what kinds of data they should be collecting from a data protection perspective. Do you see like any points for data minimization and things around that?
Okay, yeah. So I can touch a bit on that. Unfortunately, I do think in terms of what data should be collected versus what data is collected, I think there's often kind of a mismatch there. And one thing we've kind of come across, and I think especially among new providers, kind of these fintechs or other lendtechs that are, kind of entering, having not previously been a bank that's becoming digitized or anything, but especially these new providers, I do think there's a habit of, kind of the opposite of what you're saying with data minimization, but really like the data binging. So I think a lot of times organizations come in or a company starts up and their initial approach is kind of, well, let's collect just every piece of data that we possibly can, and we'll figure out kind of what to do with it eventually. So it's kind of this approach of, we don't know what will be valuable or what factors might tell us who's a worthy recipient of our loans, or these other things. So you end up having and we've heard examples of providers, I mean, collecting everything from, photos, looking at call histories. We've heard examples of providers that end up finding out they're collecting data they weren't even aware of, that they're basically collecting all this thing, and then as they finally get more of an established data team, they start looking in and they find, oh, we've been collecting people's entire photo libraries and the metadata, or we've been collecting all these other aspects, which, some people in the business might not have even been aware of. And, realistically might not have even been like an intentional decision. It could have just been, the kind of business side says, oh, data is valuable. Everybody talks about how valuable data is, so we want all the data we can get. And then you have, product teams and others who are just kind of left to meet those demands, maybe without really thinking through, well, what are the potential misuses of this data, or what problems can this cause? In terms of what should be collected, I mean, I do think it depends very much on what their approach is and what they're trying to do. Obviously traditional lenders would collect things like assets, like income, maybe looking at some accounts and things. But I think, in terms of reaching the most vulnerable, I think there is benefit to kind of looking into alternative data sources, or looking at things that traditionally may not have been asked for. So, we see things like, where there are kind of digital payment systems, just kind of that transaction data, or, mobile wallet transactions. I know also it's common for things like telco data to be collected. So looking at airtime top-ups and data top-ups, and kind of using that as a proxy for income and activity of a person. And so I think, or like, even looking, starting to try and look at things like utility payments, or, if some of these credit bureaus and others are starting to look, they're starting to accept, okay, I see this person is making their electricity payments, or their gas, or, these, or their water payments on time, and kind of, using those sort of things as evidence of at least some sort of stability. And so, yeah, I think kind of all of that can be beneficial, but I think with data, the approach should always be, to have a clear justification for each thing, like always err on the side of collecting less. If a company feels like they want to start collecting new pieces of data, they should have kind of a clear vision of what they're going to use that for, what the benefit will be, to the business, but also, is collecting that data going to be a benefit to the customers? It can allow them to get better loan terms, or a higher loan limit, or like making sure there is kind of that mutual benefit. And then obviously for them to be clear, what happens with that data once they have it. What are the rules around reusing it, or around passing it on, or selling it to other providers? And even internally, like, how can that data be used? I think there's numerous stories in all sorts of financial services, but in LendTech, of some of this alternative data that maybe helps somebody get a loan they wouldn't have, but then it can be turned around to use for kind of negative purposes, like pressuring them to repay, or like you always hear instances of people kind of shaming someone's contact list, where they take a loan, they agree to share their contacts with the lender. If they're late paying, that lender might start texting the other people on this contact list and saying, oh, hey, this guy Colin isn't repaying his loans, maybe you don't want to be friends with this guy, and that sort of public shaming, which is obviously very concerning. We've also heard of things like, in India, they have a digital payment system, known as UPI, and there have been instances, and again, that transaction data has been used to give people loans they might not have been able to get otherwise. But there's also stories of lenders looking at where transactions are being made, and then essentially going to find their customers there to put pressure on them to pay. That they can say, oh, I see this person just made a purchase at such and such a store. Let's send one of our lending agents there to try and meet them in person and kind of push for this payment and things like that. So can go very many different directions.
Yeah, I mean, you touched on something that really has given me sleepless nights sometimes. I mean, it's the fact that they even collect data without knowing, or they just they want to
Yeah.
just collect as much as possible and then find the reason to collect after they've collected, while it should be the other way around, where you're collecting only because you have like a justifiable reason or a lawful basis for the collection in the first place. And I mean, this brings me something to things around permissions, right? A lot of from my end of the side, from my end of the table, what I've noticed is that a lot of these Lentex have very funny and unnecessary permissions, right? They're asking for permission to go through all your messages. They're asking for permission to your whole gallery. They're asking for permission to, or just wanting to put SDKs on your phone that are unnecessary. I mean, the list goes on and on and on. And I mean, it's just crazy, even up to biometric data, right? Some of these apps request. And I think these are things that we sort of need to pay attention to, because it gets worse, right? Or it could get worse. And because we're talking about one end of the collection, we really never know how long this data is being kept, because again, some of them have really bad practices where they don't even have proper privacy programs where they implement retention schedules, or they're very or they've even automated some of their retention schedules, or they don't even have, some of them don't even have, right? And the ones who have are not even fully implementing. So I think that's really another sad part of the story when it comes to Lentech. But coming to that gets to users more, right? And I'm talking recovery tactics, right? What are some of the craziest things you've come across or you've seen when it comes to recovery tactics?
Yeah, so I think so. The two I think I just meant, I know like the social shaming, I think is one of the most common. You see, you see in a lot of markets, this whole thing of, if this person doesn't pay, we're going to tell everybody how unreliable you are, and we're going to send your picture. So I think those is more common and concerned. I do think one, the example of looking at transactions and then using that to find location, and then using that to go kind of apply in-person pressure. I've only really heard of that in kind of limited context now, but I do think that's something that could become more common. Honestly, I think the most concerning one that I've ever heard of, and I believe, I think I'd also read about this in one of these CGAP reports, but was essentially that there was lending apps in China at one point that were targeting, students, and particularly female students, and they were doing practices of asking for risque photographs, like I think either taking them from the phones or kind of demanding compromising photos from the students that would then be used, in the event that they couldn't repay. It would essentially be giving them a piece of blackmail. I say, it was something that kind of direct and kind of unscrupulous. So that was probably the most extreme and probably the most concerning, maybe, that I've heard about, in terms of just kind of how brazen it was. I think there's also very strong cultural considerations and other things in terms of how much that's so. I think like the social shaming aspect. I think there are certain areas, or especially people that are maybe closer to their communities or those they live with. And I think providers realize that kind of different types of pressure can work in different situations. And there's certain areas where that kind of public shaming might really affect someone. There might be others where that's less effective, or maybe in urban settings where there's kind of less of that community feeling, there might be a little less of that. But I think kind of the more data, and again, I think that's one of the issues with kind of this data binging is, the more data these providers have, the more ways I guess they can kind of find to misuse that data towards their own ends. And it's definitely a problem.
I mean, I totally agree. And just to cite an example, in Nigeria, I think the craziest thing I've seen is people, so Lentech sort of putting out obituary pictures, right? So someone owes them money, and in a bid to recover their money, they put they create a picture and announce to the public that the person is dead because the person has refused to pay their money. On this side of the world, sometimes it gets really crazy. Some Lentex have gone as far as announcing to the public that someone has probably a deadly disease that's communicable, like really crazy things, right?
It's hard to imagine how the conversations that must happen on their side when they decide to take those sort of tactics. But it's terrible.
Yeah, I totally agree. And I think balancing this with the fairness principle, right? For a lot of the tactics that some of these lend techs use, do you think it's the user or the borrower probably it's a reasonable contemplation on their part that, oh, this might happen? Because I think it gets really crazy. So I mean, I just wanted you to just probably touch on balancing this out in terms of fairness, but also,
Yeah.
and there's also the side of this loan companies being able to also recover their money, because it's business at the end of the day and they don't want to be losing money. How do we balance this out in terms of fairness to the user, but also in terms of fairness to the loan company? Is the recovery tactic in a reasonable, is it a reasonable contemplation on the part of the user when he's taking out the loan that, oh, if I don't pay the loan, this could possibly happen?
I think that's the kind of a good question. And I absolutely agree that, companies, they have a right, their companies aren't charities. These lendtechs are coming in to run a business, to make money. So I mean, obviously you understand, they need to have some policies in place to protect their investments and make sure they're sustainable. And also understanding that, if lendtechs are unable to recover their money, they're going to stop lending and other people are going to miss out on, access to that service. So I think that it is very much like you're saying, kind of about that balance. I don't think it's ever that, companies should be prevented from any sort of recovery or follow-up. But I do think that balance is just so far shifted to the companies and the providers at this, the giving of consent, that, oh, I'm going to this website or I'm starting this app. Yeah, there's some sort of breakdown of what I'm agreeing to. But, I think, compared to no consent whatsoever, that's a good step. But I think it's become pretty clear to, I mean, I think people in the space, but I think anyone that uses, uses the web on a regular basis, that this kind of current consent model, it's very much broken. First of all, there's kind of the fatigue aspect that it's just, if I'm going, if I'm going from website to website throughout my workday, who has time to read 1,000 different T's and C's and compare what each is happening and what the follow-up's going to be. So, I think there's there's that fatigue side, that it's just kind of, it's like information overload, and nobody really gets much out of any of that. I think there's also, I think, well, one thing maybe we'll touch on, and I think one of the topics we discussed going over in more detail was, even like deceptive designs, which, I know you all have done some, a good amount of work on. But that's the other thing, if people are giving consent, but it's not really through legitimate means, or they're being misled either in the language or the physical design. And, I think, especially low income consumers, if they're coming to some of these lendtechs, regardless of how clear everything is, even just kind of the pressure that some of these customers, if someone is, their child's been injured and they need a loan to pay hospital fees, somebody in that situation is going to agree to almost anything. And again, from the company side, they say, oh, well, this person agreed to this data, or they agreed to this sort of follow-up. But I think there really has to be strong understanding of, was that person agreeing? Did they really understand what the implications were? Were they in a situation where they could have said no, essentially? So in terms of drawing that line specifically is difficult. I think obviously, data protection laws from regulators and policymakers, and even just kind of some existing and emerging kind of consumer protection legislation around how coercive things can be, what sort of pressure can come on. But yeah, I mean, I do think the balance needs to kind of shift back a little bit at this stage. And, understanding the companies, again, they need to be able to recover some of their money and be able to go forward, and, they're going to be sustainable and grow. But I think, particularly dealing with customers, at the lower end of the income pyramid, and especially customers who maybe have had very little exposure to financial services in general, but especially to digital financial services. I think the gap of understanding and really knowing, what does it mean if I'm saying yes to sharing this data, and what are the potential implications? I think the vast majority of people taking maybe the first couple loans from organizations or companies like this, they're unlikely, like even at our level, to know exactly what you're agreeing to, and what might happen once you hit that yes.
I'd say that, I mean, I think it's really important that, like you mentioned, right, that people be informed of the sort of recovery tactics that these digital lenders employ. So for example, you tell the customer or the consumer that, oh, these are the mechanism which we use to recover loans in event of default, and they also understand that clearly. Maybe someone in the privacy notice or as a policy on their website or on their platform, and I think that's important. But I also think it's important to balance things out, because in terms of people can become really desperate when it comes to finance and money and being able to access that, right? I mean, people being desperate a lot of times, first is that they're not really keen on reading everything they see because they're desperate to access the loan, right? So that's that part. And there's also the part of not contemplate or reasonably expect that they might not be able to pay back, and that eventually happens, and you've already signed up for something that's totally crazy, right? And I mean, in hindsight, when you've already gotten the money, you then realize it's crazy. So I think it's also, like you mentioned, it's also important to balance things out, right? From a regulatory point of view, right? I think that's really important as well. And in terms of lawful basis, I really wanted to ask you, right? I mean, when it comes to Lentex, some personal data we collect is definitely tied, or could definitely be tied to legitimate interest as a lawful basis, right? And I'm saying for those kinds of data, right? For example, collecting data that you want to use for analysis in terms of assessing whether the person is able to repay the loan timely, or whether the person generally has like good standing, or probably has a credit score high enough, or you just want to be sure that the person is capable of paying, right? And then you collect extra data like maybe if the person has other residential addresses, where are they located, and just probably extra data, right? Do you think that collecting data on that basis sort of passes the three-way legitimate interest test?
Yeah, I mean, again, yeah, I definitely think, I mean, for any lender, I think there's a kind of a baseline of some of that data that's, obviously the things you need for kind of any sort of KYC process. But even beyond just kind of having reasonable info on who your borrowers are, where they live, points of contact. So yeah, I do think that there is, legitimate reasons to kind of collect a lot of that personable identifiable data. I guess gets a little tricky, I think, in terms of how it's being used. But I do think when it kind of become when that data is then used to put kind of the undue pressure on customers, or to kind of bring others into the community and kind of rely on that sort of pressure, that's when I do think there get to be some concerns. But yeah, I mean, I think there's absolutely that kind of baseline of data that is absolutely reasonable for lenders to collect and use it just for their own normal business practices and purposes.
Off the back of that, I just want to need to speak a bit on data sharing with third parties. So because of the kind of business they're on, I know definitely sometimes it's a necessity to share data with some financial institutions, or to check credit scoring and things like that. But I'm talking more on the recovery aspects, right? Some lendtechs have adopted the practice of sort of contracting with third parties to share data with in terms of for recovery, right? So they share data with another third party, who then goes ahead to now proceed with recovery. And a lot of times what happens is that you really can't be sure of the other party's practices or procedures, except you do like a vendor due diligence, or just basically vendor due diligence, right? Or verification. How do we then balance things out? I mean, sharing data with another party based on recovery, because I mean, this doesn't really flow to the main business in terms of the transaction that goes on with the lendtech and the user or consumer, right? How then do we balance, or how does data sharing with third parties come in, especially in terms of recovery?
I mean, I think ideally, providers would essentially, set standards around how, and again, in an ideal world, but, for providers to essentially set standards of, how they would utilize data, like what would be the actual uses of what they're collecting. And, to have is when the user's consenting, that providers should essentially be agreeing to say, these, that once we possess this data will be subject to these conditions kind of in perpetuity, saying that regardless of, if this gets passed to a third party or to a lending, or if it's, if our company is acquired elsewhere. And I know, again, that's, easier said than done. But, I think ideally, if the provider or the lendtech is explaining kind of, what data they're collecting, what it's going to be used for. That should essentially, that any customer or consumer should be assured that what I'm agreeing to now, it's going to apply to these pieces of data regardless of what company they end up in. And now, obviously, managing that is tough. Obviously, for the providers, they probably don't have that much motive. Once they get to a point where they're passed records on to a third party collection agency, they probably has less motivation at that point to be good stewards of that customer's data, because these are people who defaulted on their loans, unlikely to come back as a customer. So you can see kind of how that I guess that motivation could be mixed or a little off. But I mean, I think that is would kind of be the hope, is that it's kind of that these companies are essentially saying, once I take responsibility for a piece of data, that is my responsibility until that data is deleted essentially, or ceases to exist. But if I'm passing it on, if we're going to be acquired and become parts of other companies, kind of meeting or matching those original commitments, which again, I know can be difficult.
I definitely share similar views. And just off the back, I know we already talked about the right to be informed, and data subjects or consumers being informed about what goes on with their data, or even in terms of probably extending that to sort of recovery tactics, to know what sort of happens. Do we share data with third parties for recovery? What kind of procedures are in place or mechanisms are in place to recover money, so they know that, I mean, this is what happens if I'm not able to pay the loan sum. But also in terms of that should be balanced, right? Whatever tactics, whatever procedure or mechanism they're putting in place should also be balanced, right? And I mean, just flowing off the back of that, and in terms of privacy notices for Lentex, what do you think? Are there certain things that are there certain trends you've noticed first with Lentex, and sort of what sort of things do you look out for? What sort of things do you expect to see when you look at the Lentex privacy notice?
I do think it's very much kind of across the board. And honestly, like, other than in context, in some wider context, I mean, I haven't been involved in much direct research or review of kind of the privacy notice space in among these Lentex and things. But I mean, I think like like any sector, like any any group, I do think there's a very wide range across the board. I think there are some Lentex who approach it appropriately, have very clear explanations of what they are. They default to kind of collect less or to keep data for shorter amounts of times. So yeah, so I mean, it'd be hard for me to kind of speak generally to that. I do think there's people who are doing it well, and then others who are say they're doing it well, but behind the scenes aren't, and then others who probably don't even care, that even on a public facing side, maybe aren't even really even putting the image out that they're trying to be good stewards of the data. So yeah, I mean, it'd be hard for me to kind of identify maybe any trends specifically in the sector, but I do think it's kind of reflective of what you'd see elsewhere, that it's just kind of such a range. And there's that it's easy for people to get in with poor practices, but there are at least some out there, I think, that are kind of approaching it more well, and kind of managing things a little more responsibly.
Thank you so much, Colin. I mean, I definitely think that's, and still just still sharing like an experience that we've noticed on this side of the continent is, I mean, it's a privacy notice, right? But we oftentimes we see that a lot of these Lentex, like I mentioned, they sort of do a copycat of another company's privacy notice, and they go ahead to sort of accept, force users to sort of accept or decline the use of a privacy notice. So you see, do you accept this privacy notice, or do you agree to this privacy notice, right? And it's a privacy notice, right? An agreement. And for some parts of, another trend that we sort of notice is that when using a lot of these Lentex, so for example, a user or consumer accepts to, I mean, you have to accept before you can even proceed, right? So you accept, that's already a problem, right? But immediately you sort of log on to the platform, there's no way to access the privacy notice anymore, right? So I mean, you saw it probably as a first glance, but you want to go back and read or check probably a provision in the privacy notice, or sort of get like a contact address for the DPU or things like that, and you see that you no longer have access to the privacy notice. So I think there's a lot to be done. There's a lot to improve on when it comes to Lentex and their practices, right?
Oftentimes your only opportunity to review some of these things is during that initial interaction. That I hear what you're saying, that maybe as you're going through the application you see those T's and C's, but you're likely never going to see them again unless you really dig for it or make a request or something. So I think that is interesting, and I think there are also ways we're kind of focusing on the negative, and I think it's almost kind of a flip. One of the things that CFI and my organization's been starting to look at is the use of positive friction in digital financial services. And so maybe we can get into that a little bit later, but just like deceptive design can be used by providers to kind of drive people to make choices or to agree to things that they might not really be aware of, or they might not really be interested in doing. There is kind of a flip side of that, of kind of introducing intentional points of friction that really push people to take an extra moment to review those terms and conditions or to review those privacy notices. And I was just thinking of this in terms of kind of the reviewing T's and C's, but I think it would also apply to consent for data and other things, which I think are often kind of wrapped up together. But like there was an experiment done by a large lender, Jumo, which is kind of present in many areas. But back when loans were being given, primarily through USSD menus, at least for them, they did a very small experiment that showed, if they basically added one more screen in that USSD process that had the T's and C's on their own, that they then saw, I think it was about a 20% increase in the number of people who actually viewed those terms and conditions. And then among that group, they ended up showing, I can't remember the exact figures, but it was about a 7 to 10% decrease in late payments. So it was essentially just and it was like a very minor change. It was just, instead of having the T's and C's kind of grouped with some other things, it was just a separate screen that said, here are the terms and conditions. You can hit 1 to continue or 2 to read in detail. And just kind of that little tweak, gave people a little bit of a better sense of, and whether those people read the full T's and C's, who knows, but it at least gave, a good enough group chance to kind of reflect, to get some of an idea of what they're agreeing to. And again, then that was reflected even in their loan performance. So it was, beneficial for the customers in that, those 20% had a better idea of what they're agreeing to, what penalties would be. But I think that's also a key example of why it was a huge benefit for the lender as well, because then they have improved portfolio quality. Their customers probably are more likely to trust them or feel a little bit more appreciated that they that they're kind of being asked to review this again. So so I think a lot of these things, it don't only have to be seen as a cost to the business, or I think that there is a strong business value argument to managing data responsibly, to collecting consent responsibly. All of these things, I think businesses in a long-term view can be very beneficial to kind of everybody and not just the consumer.
I totally agree. And I wanted, since you mentioned it, and it's kind of it's one of the things that CFI is currently working on or considering. I wanted you to speak a bit more about what you mean by positive friction and how it sort of impacts or solves for problems identified in the space.
Yeah, certainly. So positive friction. So it is, it's a concept that kind of has been thrown around in design generally. I think there's not a ton of work linking it specifically to like digital financial services. We've come across, that the example I just said, and I can discuss a couple of other kind of interesting examples. But kind of the concept itself beyond, there's very interesting examples kind of outside of financial services. So like one kind of common one was the idea that like blister packaging for, this is a little off topic, but I just think it's kind of it kind of elevates the idea well, and then I can talk about the financial services ones. But so blister packaging, so like Tylenol, other kind of over-the-counter painkillers used to be primarily sold in very large pill bottles. You could buy a bottle with 50 or 100. in the UK at one point, a number of years ago, they started pushing for some of those products to be sold in blister packaging, which means one or two pills in one of those kind of annoying little packets that's hard to open, but you only get kind of one serving per each. And essentially that was implemented because there was a number of people committing suicide, or there were liver problems being caused by people overusing some of those drugs. And so introducing that little piece of friction, just making it a little more difficult to access the pills, things like that, they saw a significant reduction in suicides from Tylenol and in liver toxicity related to that. And so that's, again, that's a kind of a very broad example, but kind of just an interesting kind of on the positive of kind of uses of friction. In digital financial services, I think there has really been a push, or kind of the buzzwords in finance, well, in digital services in general, is usually seamless and frictionless, and the fewest steps as possible. And you want it to be somebody can open your app and click two buttons and then they're a customer. Like, you want to make it as easy and smooth as possible, which of course customers obviously do desire that. People enjoy that kind of seamless experience. But I think a lot of that push, it has overlooked of, well, at certain times, it's good to give people that opportunity, of kind of giving people that little block or opportunity to really think through what they're about to agree to, or to make it a little harder for people to maybe pursue their worst impulses. So two examples, a company called Monzo in the UK, they had come across from research from an organization called the Money and Mental Health Institute that found that people with gambling addictions were much more likely to have other financial issues, whether it was whether they're declaring bankruptcy, having unsustainable debt, trouble managing money, all things like that. And so Monzo put into place a gambling block, and so that was a voluntary block that their members could add. And essentially, once you turn it on, it's pretty simple to turn it on. You kind of activate the block, you confirm you want it on. Once that's done, they're able to use kind of the transaction codes, and they can essentially block that account from being used with any gambling websites, any in-person kind of gambling, whether it's lotto tickets, whether it's anything that essentially has those transaction codes where they're able to see kind of what the purpose of it is. It gave those users a chance to voluntarily block themselves from pursuing that. And they found that to be and then to turn it off was a little bit more of a delayed process. You had to, you could go in, you switched it off, but then I think it was either a 24 or 48-hour period before it would actually be turned off. And so that was, one example of kind of a voluntary friction that's put in place, but it's, making it more difficult for people to do what they intend, which is gamble. But again, it kind of just gives them that opportunity to really rethink that if they want to gamble, they have to switch it off, and then it makes them think, okay, is this the best use of my, like, it's just kind of that extra time to really consider the cost and benefit of a decision.
I mean, that's really interesting. I definitely will be doing some more reading up after this session. And I mean, I think just to round up on the conversation, I wanted you to speak a bit on deceptive practices and sort of trends you've noticed with Lentex and sort of the deceptive design tactics they use.
I mean, I think, again, to some extent, I think the use of deceptive designs in financial services is, it can be used just like in any other kind of market or sector, where it's, you're driving people towards the higher profitability items, towards things like that. I think a key one that we've already touched on is, deception in the kind of consent stage. I do think, I think, well, deception in terms of, agreeing to share data and things like that. I think also there's a lot of lenders who are, deceptive in even in presenting the loan, the terms of the loan, the penalties, kind of things like that. They can kind of intentionally obscure how quickly you're likely to start paying penalties, what those fees might look like, how it's going to increase, maybe what their kind of responses are. But, I think also, I think kind of like we were talking about in terms of finding a balance, in terms of, redress and things like that, and debt recovery. We know that, deceptive designs, I think one of the challenges with those right now is, there is a fine line in some cases between, clever or even just aggressive marketing and kind of deception. It can very quickly go from, oh, we're targeting this group for these reasons to, oh, we're targeting this group and we know that this design is going to increase the likelihood of them selecting this option or this product, or ignoring this kind of protection that we have in place. So I mean, I think that is clearly a big challenge with a lot of these are kind of managing that. I think that there is a sense, I know you see more and more kind of dedicated legislation and things that are starting to look at some of these. But I think also, you also see kind of successful use of a lot of existing mechanisms and just, general consumer protection laws around deceptive marketing or manipulative sales. And I think in some cases it's not necessarily, I think it's that the people regulating or that are kind of managing these issues, not necessarily they need to recreate the wheel or come up with something new. It's more about elevating the ability to kind of identify these issues, where these problems are and kind of what the negative impacts of some of these things are. And yeah, I mean, I think that is, I think with a lot of regulators, policymakers, even kind of consumer groups, it is just, that challenge is kind of, again, kind of making that distinction of what's acceptable and what's not. And even just kind of, being made aware of some of these things is, it's their, a lot of the average consumer, some deceptive practices, to be able to report it to someone who can then kind of pursue it. So I think all of that can be concerning.
I definitely agree. Thank you so much. And just as last words, any sort of practices, advice, things you would like to see when it comes to the digital lending space, both on the part of the consumer and on the part of the lendtech companies?
Yeah, I mean, I'd say in general, kind of this, well, maybe I'll make kind of a broad pitch of, so, I mentioned kind of this positive friction. Some other work that we've done at CFI is by privacy, is we put together a toolkit on privacy by design. And so that is a toolkit that's aimed specifically at product teams in digital financial services, but the toolkit could be applied kind of beyond. But obviously from our background and interest, it's a little bit geared there. But it's really a sense of trying to move a lot of these consumer protection, data protection, privacy issues, move it away from kind of this compliance approach where companies are basically like, let's design this product to meet our needs, and then okay, then we're going to check with legal, we're going to make sure we're kind of not breaking any laws, or we're not going to get in trouble. But it's it's often seen as kind of a backwards looking, we're going to design this product kind of for what's best for our company and what's going to make us the most money, and then we'll kind of go back in and make sure we're aligned with any consumer protection or data privacy or data protection laws. So I think one thing I would like to see more in LendTech and all digital services and financial services is really like kind of the recognition that, especially as you start to incorporate things like, strong privacy protection, strong consumer protection, when it's incorporated in the design phase, that it really does, when you're thinking about it from the initiation of a project, that, it really becomes more beneficial. And, I think businesses start to realize that it is, it's not just something they should be pursuing out of fear of getting fined down the line or these other issues, but really that kind of incorporating these issues at the design phase allows these companies to really see greater benefit. They're able to implement kind of these needs cheaper and in a more I guess kind of streamlined way than kind of going back and trying to meet regulators' demands afterwards. And at a provider level, but especially at a market level, to recognize that building these things in is going to only build trust among consumers, which is going to make them more likely to come back to you as a provider and just to engage with the sector in general. As we've seen the rapid growth of these digital services, leading up to COVID, and then really kind of hit the gas during COVID. If you're someone who's never used a digital loan or any digital financial service, if your first experience getting a loan is you didn't really understand the terms, you end up you pay late and you didn't realize how much the penalty is, and then all of your friends and family are getting text, like all these issues we've been talking about, the likelihood that that customer is going to want to come back to your company is obviously very little. But even for them to pursue other, to find another lender, to find somebody else, it really just kind of shakes that confidence. And so I think, businesses recognizing that on an individual basis, it's going to be beneficial to them to really be conscious of these issues. If they want to be long-term sustainable, they have to have that customer support and trust. And even at the market levels, for providers to recognize that unscrupulous actors, affects everybody. So even if, you don't have regulators and others that can step in, there's industry associations, there's civil society groups. I think there's a lot of channels that can kind of elevate these issues. And hopefully get a lot of these
Yeah.
new players and existing players and everybody else to kind of recognize, consumer protection, these data, like this isn't all about the consumer benefit. Like, even I think from our side as researchers and practitioners, we recognize that there has to be that business side. So I think just helping to
Yeah.
elevate that and explain that, these things can happen together versus, it's not always either the business benefits or the consumer does. I think that adversarial view is kind of not that helpful.
I totally agree. Thank you so much. It was such a great time having you on the podcast, and I mean it.
Until next time.
Yeah, it remains our lovely DPO and I, Itunde. This episode was sponsored by Ikigai Innovation Initiative and was brought to you by Tech Hive Advisory.
And a big shout out to our executive producer, Ridwan Oluyede, associate producers, Dolapo and Collins.
This podcast was edited by Ayonfe Aino, shout out to her, and our podcast associate, Victoria Adaramola, and graphics by Okwe Abujade.